Today is a great day for Porsche, but also a great day for Volkswagen. We've taken Porsche successfully public today. That gives more entrepreneurial freedom for Porsche to pursue its business strategy. And for Volkswagen, the process will give us more financial flexibility to invest even stronger in the future of digitalisation, of electrification. And so we got a lot of positive effects also for our transformation.
If I'm doing the math right, you actually realized some 19.5 billion euro from that very complex IPO structure. What are you planning on doing with all the money?
Now, as you're aware, almost 50% of the money we hand over to our Volkswagen shareholders because we think they should also participate from this positive event. And we take basically the other 50% of the money to invest even stronger in our future in electrification. Perhaps you are aware, in Europe we plan up to 6 battery factories to build and run these battery factories by ourselves, since we are convinced that the successful supply and efficient supply of battery capacity is crucial for the success in the future. For that we foresee about 20 billion plus investment alone. There are another about 10 billion for investments in the upstream for raw materials. And this is one field we want to invest the proceeds in.
You pushed ahead with that IPO despite a very volatile market, recessionary scenario. So why did you stick to the timing?
I mean, we were always convinced that will be successful. Look at Porsche. Porsche is a great company, has a great track record, has strong financials, a very convincing strategy for the future. Also for the electric future, Taycan is a great product. So we were convinced that despite the challenging environment, this IPO will be successful, and we were proven right.
Let's talk a bit about the recessionary environment and the headwinds your business is facing. So how is the business doing?
Look, we've proved that we've been much stronger today than we have been in the past. We were faced with multiple challenges. There is, for example, undersupply of semiconductors in the whole industry. We had a shortage of wiring harness due to the terrible war in the Ukraine, and also the COVID measures by the government in China. And despite these challenges, we delivered rather robust results. So that is a testimony that we have become much more robust. We reduced the fixed costs compared to 2019 by 4 billion, and we are convinced with that much more robust situation we can also be much more positive in the future despite challenging environment.
You've been talking a bit about China. China seems to be in a very difficult place right now. So how is business doing there?
We were also very affected from the semiconductor shortage in China. During the last 2 months we picked up significantly, and with the better supply of semiconductors we are really convinced that we can come back to old strengths.
Talking about the semiconductor shortages, when do you see those easing?
It's a good question. From today's perspective, we think throughout 2023 we will still be faced with shortages. We expect a better supply in 2023, but we expect easing of the shortage only to kick in 2024.